Jahangir Aziz is now joining us. He's the head of emerging market economics research at JPMorgan. And we have Arvind Sanger, managing partner at Geosphere Capital Management, with us as well. Gentlemen, great to have both of you here. Important day for us, and especially the context is, of course, slower growth in that sense. Arvind, and I must say, before I come to you, no FIIs today. I began by saying that. The reason I say that is because they've been sellers every day. So today, they're on a holiday. So we can, I guess, deal with whatever comes our way from the budget. But Jahangir, you go first. What's your sense? I mean, generally expectations are low, which is a good thing. But top of mind, what's your sense?
Look, I mean, it's probably going to be a deja vu budget, in the sense that they're going to stick to the consolidation path. The way in which the Indian budget is framed, I don't think they can even provide any counter-cyclical support. The last time we had any reasonable or measurable counter-cyclical support was probably back in 2009, the global financial crisis, and a tad bit during the COVID 2020 years, because that's the structure of the budget. And consequently, I don't expect anything counter-cyclical. Indian budget have always been pro-cyclical and will likely be pro-cyclical. So in a good year, we will be spending a lot because the revenue is a lot. In a bad year like this year, revenues are going to be the growth in revenue is going to be lower, so the growth in expenditure is going to be lower, which is going to add to the growth slowdown. So I don't expect any reasonable any change in that, even though in the July budget did promise a new economic policy framework. So more or less, you have to look at what the budget does in the plumbing and maybe on the medium-term growth drivers. So that's what I've been looking for, whether they do much in the plumbing, rationalizing the tariff and the income tax. The tariff, rationalizing the tariff just might become a big deal. We'll see what happens tomorrow morning with the Mexico, Canada, and the China tariffs. So, I mean, that's where I'm looking for.
Yeah, but White House has already announced that the tariffs come into play on Saturday.
They've announced, then they've confirmed, then they've again confirmed, but it is we still don't know when it is coming. So that is the state of affairs. But Arvind, and that's the important variable as well, which we will know over the weekend. But your thoughts, if what Jahangir says plays out, from a market perspective, what's likely the sort of implication from here on? The context for markets very near term is that emerging markets since Trump's inauguration have done better. They're up about 5% or so. Here in India, we're not. We're actually absolutely flat. Your thoughts?
Well, clearly, India has its own problems, and it's India's problem, as Jahangir has also alluded to and you've talked about, is the economic growth is disappointing. And, like Jahangir said, the budget is unlikely to do anything dramatic. So I think the most we can hope for is, at the margin, some positive news on simplifying some taxation, maybe linking it to inflation, some of the things you were talking about. But, if I were to think of a dream budget, which I don't think we're going to get, it would be about massive privatization. It would be about significant tax benefits to, take some of that money and incentivize, more confidence in consumers and business, because that's what's missing. Right? We can keep wishing for a government infrastructure to keep driving the economy, but at the end of the day, you want the private sector and the consumer to drive the next leg of the growth. It can't just be the government keeps building infrastructure and nothing else works. But I think that, I think we're probably going to get a budget which is not going to be harmful. I suspect there won't be any tax increases. But I don't think I'm expecting anything dramatic either. And I would say, look, one of the things that makes business people and investors more optimistic on the U.S. is significant cut in regulations, notwithstanding the tariffs. I'll be blunt, call it stupidity that Trump is kind of going down in some directions. But assuming that that's not policy, then that is going to sustain. Then I think the deregulation part will be the more important one. And I don't think budget is the place where it gets announced, but I think some regulatory major moves, and privatization would be part of that if that happened. But something on that front would be more meaningful in a world where you're facing competition for capital flows, from other emerging markets, but also from the U.S., which has clearly, gotten a lot more attention.
Arvind, hi, morning to both of you gentlemen. Arvind, I was just hearing you make your points, and I was like, wow, we've not heard this in a while, right? Dream budget and tax cuts and incentivizing the consuming class in the same sentence, right? Usually dream budgets are only about incentivizing manufacturing or industry, but I think this is the slight new in this budget as we discuss this today. Jahangir, I just want to go back and probe you a little further. On this whole fiscal deficit point, do you think there'll be absolutely no departure at all? They'll keep gliding down the glide path, given the circumstances, given the clamor for some relief, given the Prime Minister invoking Goddess Lakshmi in his speech yesterday? You think absolutely nothing whatsoever? They'll remain in that limited room and announce, further reduction to the deficit?
Look, I think that's the way in which the framework is set up. The framework in India, you target the fiscal deficit, adding all asset purchases, RBI transfers, etc., because you're only worried about how much is the debt-creating part of the budget, right? And your real angst is, what it does to public sector debt. Now, there's a lot of appeal to that. Right? It basically underscores that, you should not borrow a lot, you should have low debt, and you should live within your means. But if that's underlying your budget theory, then living within your means that when incomes are high, I'm going to spend more. When incomes are low, I'm going to, not spend more. But that's exactly not what the government should be doing. In order for the government to have a proper counter-cyclical bias, which does not undermine the credibility of the budget, then the target should not be the overall fiscal deficit that is debt created. The target should be structural deficit, which is the deficit after you've taken account of what is the cyclical impact of the economy. But we don't do that. So I don't see how they can get away from not going down the path of going towards 4.4. Maybe they won't go to 4.4. Maybe they'll go to 4.3 or 4.2. How will that matter in any material way to boosting the economy? I think that's where the problem is, because we're stuck in this quagmire that we have created for ourselves, by the way.
Okay. Well, I don't know. The CEA yesterday, when he was pointedly asked, will you advise boosting consumption, he nicely skipped it by saying that, yes, of course, we want an urban consumption boost. That's why I'm asking for deregulation. If they deregulate, industry will invest more, create more jobs, and that will create more urban consumption.
Through the employment.
Very diplomatic answer. But, I wanted to ask you, Arvind, the rupee is fairly cheaper now compared to what it was 3 months ago. You're at 86.6, and I think it'll get cheaper on Monday, considering the way in which dollar has climbed. Plus, stocks have also fallen. Are we at an inflection point where India becomes attractive?
It's starting to get attractive from a valuation standpoint. I think the problem was that you were priced for perfection of growth, and valuations were expensive. You've had enough air come out of the bubble, certainly of the mid and small cap names, that things are starting to get to levels that are becoming interesting. I won't say that it's in a value territory, but I think it's in a reasonable mid-range territory. So I think to the extent that it's not going to get into value territory, it's time to start nibbling. And if the budget gives us, in contrast to what Jahangir says, if the government is a little more bold and willing to take anti-cyclical, not pro-cyclical steps to try to boost the economy, then I think it would be time to jump in with both feet. But if they keep going incremental, then I don't think there's a rush. But over time, I think the market is starting to look attractive and would be we would be starting to nibble.
That's the loveliest words we've heard, Arvind. Thanks for that. Jahangir, the CEA's in the survey, the estimate is 6.3 to 6.8% GDP forecast for FY26. Would you call that realistic? Would you pitch at the lower end, higher end?
So, we are sort of towards 6 rather than in the upper end of 6.5 and 6.8.
Lower than the low.
And, look, this is a very, very uncertain period, right? It is very hard to say that there are 2 engines of growth in India. Right? One engine of growth is public investment, which might slow down a bit, but will still chug along. because, the revenues are. And the other is services exports. There are no other engines of growth in India. Consumption has been growing exactly what has been the growth in real incomes. I don't see consumption growth moving beyond that. And, for consumption growth to go above real income growth, you actually are asking for a reduction in the saving rate of household sector. Do you really think that the Indian government is going to say, we need to reduce the saving rate of the household sector? No. I think not. So if those are the only two engines of growth you have, one of them can be safeguarded because it's very domestic, public investment. The other one is completely and totally open to what happens in the global economy. And as we've been talking about almost for 2 months now, the global economy is very, very uncertain. So it's very hard to say, sitting in February of 2025, one day before Trump's first tariff announcements, then how will 2025 look? And as Arvind said, and Arvind made an excellent point, that even though there's tariffs and immigration and all of that fears about reducing U.S. growth actually is getting offset by the fact that there is enormous amount of business confidence and animal spirits being built up simply on the promise of deregulation. And unfortunately, we don't have that in India.
Point taken.
Absolutely. And, points taken. And, we'll of course, continue to speak with both of you gentlemen through the course of the day and we'll get you more opinion as well. Jahangir and Arvind, thank you very much for joining us bright and early. I think it's late for you, but bright and early for us here on this important day. Thank you.